Hello everyone, welcome to today's US Open live webinar. It is Thursday, June 6th at our usual time slot, 10 minutes before Wall Street opens. I'm your host, Nikos Zabouras, Senior Market Specialist at FXCM. The week started with a bang and we continue to get a surprise from central banks over the past few days. And the latest one was from the Bank of Canada, which increased rates unexpectedly a day after the day actually after the Reserve Bank of Australia had also surprised with its rate increase. Now, of course, markets gear up for the Fed and the ECB next week amidst uncertain monetary outlook, while Euro USD has been moving mostly sideways as of late. Before we begin, however, with today's webinar, as always, please read carefully through the risk warnings and the disclaimers, and then we will get started. As always, please bear in mind that anything discussed here does not constitute investment advice and should not be construed as such. Okay, let's get the ball rolling, and we'll start with USD versus the Canadian dollar. Of course, if there are any questions or comments, or you simply want to share your opinion with us, you can type your comments in the chat box. Now, the Bank of Canada was the first major central bank to pause its rate hike cycle back in March and stayed on the sideline for the ensuing 2 minutes as inflation was decelerating. However, the latest data showed an uptick in April, the first in nearly a year. So policymakers changed tack and raised rates by 25 basis points on Wednesday to the highest level since 2001, as their policy stance was not sufficiently restrictive, according to the release, to retain inflation to the 2% target. Now, as a result, the loonie dropped. You can see this drop here to new month lows, and is now exposed to the 38.2% Fibonacci of the 2021 low, 2023 high, advanced 22 actually. Although a strong catalyst will be needed for a bridge and a bigger decline towards the 50% and the 1.2995, 1.2975 region. On the other hand, it steadies today, although it remains suppressed, and we could see an effort to retake the 200 period EMA at around 1.35, but the 2023 highs are definitely distant, all the way close to 1.4. That's it from in regards to the loonie. Now let's move to Euro USD. Markets continue to assess the next step by the Fed and the European Central Bank. The latter has clearly pointed to more hikes. However, inflation decelerated significantly in May, according to the preliminary data, and the European economy contracted in Q1, according to today's release, just days after Germany had entered a recession, which is a technical recession, which is generally defined as 2 consecutive quarters of negative growth. So that definitely is something to consider. Now, things are definitely less clear around the Fed. 2 voters last week had favored a hold just before the communication blackout period kicked in. Markets adjusted accordingly, and they price in a pause in this month's meeting, but still see another hike after that. The pair is moving sideways over the past several days. You can see this move, essentially the sideways move, close to the 200 days EMA. Which had supported it earlier in the year. We have talked about that multiple times. It rises today with the help of a significant increase in US jobless claims. And as long as it can defend this level, it has the ability to push for this pivotal area here. The start of the daily smoke cloud and the 200 period EMA at around 1.08. However, it definitely is close, but we're not sure if it's ready yet to close above that level and pose this downside bias that we have been seeing lately. Now, this is important, such a daily close, for a rebound, but it does not yet inspire confidence for greater gains and an exit from the daily smoke cloud, which would be placed a little below 1.1. However, despite today's lift, the common currency is in a precarious position, and there is scope for further losses. And the 2023 lows at 1.0481 are still in play, but we still see the case for sustained weakness at around that level to be difficult. And as we're 3 minutes ahead of the US Open, let's go to the NAS 100, the tech-heavy US index. Not much has changed there, the truth is, compared to what we have discussed previously. It dropped yesterday, and we can see further slides towards the 200 period EMA. This is the drop yesterday, and the 200 period EMA stands at around 13,800, but strong catalyst would be required for deeper correction in case the downside seems well protected. Markets expect the Fed to stay in the sidelines, which is helpful, but on the other hand, they are now pricing in one more hike, and that could weigh. But the tech sector is on a roll, with generative AI being front and center, and we've talked about that extensively, while Apple, we discussed about that on Tuesday, entered a new market, the augmented reality market, and that can also help with innovation and sustain this positive sentiment in the tech sector. Bulls, in any case, remain in control. They have the ability to set new 2023 highs, but it may be early to talk about strength past 17,274. That's pretty much it from the technical analysis and latest developments. So let's turn to what we expect ahead. China inflation and producer price index, of course. Recent data have pointed to weak demand and have cast doubt over China's recovery. We've talked about that and written about that extensively. In April, CPI had almost stagnated at 0.1% year over year for the CPI, which is the lowest in more than 2 years. Also tomorrow, we expect the jobs report from Canada. The labor market remains very tight according to the central bank, so it will be interesting to see the latest figures. Now, next week starts slow with UK employment standing out on Tuesday, but things heat up in the second half as the Fed and the ECB announce their latest policy decisions, closely watched ones, but we will talk more about that over the coming days. That's it for me. Thank you for joining me.